If you are not building wealth with your life insurance policies, you are using them incorrectly. My name is Carmen.
And I'm Darius. And when we're talking about building wealth with your life insurance, the assumption is that you have to die in order to pass on a lump sum of money over to the next generation.
Yeah.
What we're going to be discussing is, yes, that, but you can also use policies while you're living to make them better for the next generation.
How about that? So let's start with the very first point, and that's making sure that we all understand the different types of life insurance, right? So the first type of life insurance that I'm going to touch on is called term insurance. And what term insurance is basically what it means in its name. It is for a specific term or time period. So you can get a 10-year contract, a 20-year contract, or 30-year contract, for example, right? And the idea is that after the 10 years is up or the 20 years, whatever your term is up, beneficiaries will not be able to collect on that policy, if that makes sense, right? Because it's for a specific time frame. Now, let's talk about permanent life insurance. In the name, permanent life insurance. So that means you will be covered for your entire lifetime. So the difference between the two is that with term insurance, as your contracts get outdated, you have to renew them. In addition to renewing them, you're going to be paying more money because now you're 10, 20, and 30 years older, right? Whereas if you get permanent life insurance, you will be covered for that one policy for your entire lifetime. So that's one thing that you really have to understand. And that also goes into the cost, right? So we're not going to compare the cost. That's not what this video is for. The purpose of this video is making sure that you understand the life insurance policies. So we have term versus permanent. So in order for you to build wealth, that option in order to use your policy right now while you're living is going to be in the permanent life insurance category, because term doesn't allow you to do anything else but just have a death benefit for your beneficiaries when you pass. So permanent life insurance. For Darius and I, we have whole life insurance policies. That is our jam. That's what we do. And that's what we sell in the Wealth Nation community. So if you are interested, definitely click on the link below. So whole life insurance is the only permanent product that provides guarantees. And what we mean by guarantees is the cash value, which is a savings kind of mechanism that grows inside the policy that I know you definitely want to touch on more.
Mm-hmm. Now, your cash value is basically a prepayment of death benefit. So a lot of times people ask, will I be able to get will my beneficiary be able to get the cash value? Your cash value and your death benefit is the exact same thing.
I'm so glad you touched on that. I want to make sure that you guys understand that, because that comes up on our channel in the comments all the time. Like, whole life is a ripoff because my beneficiaries don't get the death benefit and the cash.
Right.
No, they're giving you your death benefit right now so you can use it. So no, they're not going to give you both, because they're basically siphoning your death benefit to you right now so you can use it. It's an advance on your death benefit.
Right. So an example of that is if you borrow from your life insurance policy $5,000 and your death benefit is $500,000, what your beneficiary would get would be $495,000, because you subtract the $5,000 that you borrowed. Now, for our example, when we talk about cash value, what we're talking about is using that cash value to replace high interest expenses that you may have in your life, or investments that you can have where you can earn interest. That's how you're going to be able to build wealth while you're here, is how you use that cash value. Mm-hmm. Because the important thing about the cash value that you borrow is, even when you borrow money from your life insurance policy, your policy continues to grow as if the money is still there because you borrowed it. And the reason why it works that way is because you use your death benefit as what do you call it?
Collateral?
You use your death benefit as collateral.
That word? What was that word? Yeah. Collateral.
So the reason why it works this way is because you've used your death benefit as collateral, which means the insurance company gives you a loan for your cash value amount, so you don't disturb the growth in your policy. Because this is really important for you to understand, because if you borrow the money and use the money to earn more money, now you're growing money in two different places. That's how you're building wealth right now before you have to even think about the death benefit of your policy.
Yeah, and it's one thing to note, like what Darius just said, it's complex, or it can be complex, especially in the beginning, is in order to build wealth, you have to understand that you're not just going to save your way to $1 million. Mm-hmm. You're not always going to have the opportunity to make that perfect investment that's going to let you hit a home run out of the gate, right? So what we truly believe in is the beauty of compound interest, is the beauty of almost
money management.
Money management, and almost like I don't want to say deferred growth, but what I mean is like everything isn't always going to be a payout tomorrow. So what we're looking at is how are we going to make the right decisions today in order to better our future? And so when you are able to open your mind to different opportunities to build wealth, to different maybe creative techniques in order to build wealth that are completely sound, then you start uncovering different ways to do that. And so for us, using life insurance as a way to build wealth was something that we completely fell head over heels for. Mm-hmm. And the reason being, in addition to that, is because there is historic conversations around this. And when I mean historic conversations, I mean like the wealthiest of the wealthiest families utilize life insurance in order to preserve their wealth and in order to grow their wealth as well. So this isn't just like the next thing that came on the market. This has been around for hundreds of years. And so for us, we wanted something that had sound historic growth and also something that we could figure out how we could continue to build wealth for ourselves.
And I think the important thing to understand is that you can mold it around your lifestyle.
Yeah.
Because initially when we started using our policies or our cash value, we just use it to recapture our debt. So we would borrow from our policies and pay off our credit card debt, high interest credit card debt, and we continue to make those payments back to ourselves. Now, that's just how we were introduced to it, how we use it initially. But now what we're doing is we're starting to take a look at our expenses and how we're able to redirect our expenses back to ourselves. So we would use money from a policy to pay our expenses, and then we take our money and pay the policies back. That way we can earn interest from a bigger portion of our income. So if right now we're up to 78% of our income that we're able to run through this system, that means 78% of our money we have available and the stuff that we use to purchase with the funds. Mm-hmm. That's how you start to establish wealth while you're here, because the only thing it does is makes our policy and our system bigger outside of just the death benefit.
Mm-hmm. Yeah. So let's walk you through like a sample of exactly what Darius is talking about. So if I have, let's just call it $20,000 of cash value inside my whole life insurance policy today, a lot of times people just let that $20,000 sit, right? And they don't do anything with it. Or maybe they don't even know that it's available to them. So because we are aware that this $20,000 is available to us inside our life insurance policy, we are looking at ways to utilize those funds to either pay down high interest debt, right? So we could take, 10,000 of that and pay off our debt. And then the money that we were paying towards our debt, we use that to repay the life insurance policy back, right? And
now what that does is it includes principal and interest. So mm-hmm. we're able to, instead of paying the interest to the company that we never see, we pay that interest and principal back to our insurance policy. Now those funds are available for us to not only borrow again, but it also grows our system.
Yeah. And the idea behind that, right, is using someone else's money, right, OPM, in order to pay down that debt. And then because we may not have all that cash available, right, we may not have a $10,000 check to write today. And that was the case for us when we started doing this with our high interest debt, is we were getting a loan from our policy. We paid off our high interest debt, and the minimum payments that we were making towards the credit card companies, call it 100, 200, whatever it was, we were making those payments back. And you can actually watch this video up top where we show you exactly how we did that. So fast forward, we're out of debt. What do? We still have money that's building inside of our cash values. A lot of you say, hey, Carmen and Darius, I don't have debt. So what am I going to do? Well, the best part about wealth is it's not about how much money you make. It's about how much money you keep.
Can you say that one more time?
It's not about how much money you make. It's about how much money you keep. And what we figured out was we have a gold mine to start playing with. And that is called our what?
Our fixed expenses.
And our income, right? Our fixed expenses.
We use our income to pay our fixed expenses. But the reason why I say fixed expenses is because our fixed expenses represent 30% of where our income comes on a monthly basis. Mm-hmm. So because of our money management, us managing our money, we're able to understand, okay, this is the percentage of the income that we're going to focus on at this point, because it's important for you to break down your income in different sections mm-hmm. so that you can be able to have conversations. Okay, this is what I'm going to do with this section of my income. This is what I'm going to save with this section of my income.
Mm-hmm. Yeah. And the idea, right, is we're calling this lifestyle banking, because we want to make money from our lifestyle. We want to live the lifestyle lifestyle of our dreams and be able to make money from it too, because why not? Because we can make up the rules. So when we look at our income, for example, right, we're just saying a plain example is if you make $100,000 a year, understanding where all of that income is going, right? And once you have a clear picture of that, then you can start looking at the cash values inside your policy like Darius and I are doing and go, okay, we can contribute X amount of money, let's call it the $20,000 towards fixed expenses on an annual basis, right? And then what we know is from our income, if we're paying all of those expenses up front from our income, we're paying it back to the life insurance policy. And what does that do? That grows our policy and our expenses have been paid and we still have the cash because we're paying ourselves back, right, through our policy. And we just rinse and repeat. We do the same thing over and over again. And the best part about it is continuing to use a dollar multiple times in order to grow wealth. For us, once we figured this out, it wasn't always about trying to figure out what is the newest investment that we can go research and make work for us. We just said, hey, how can we better utilize our income and make money from it and build wealth and have a death benefit at the same time? Like, that's triple dip in my perspective, is we're doing all of this inside our system that is going to allow everyone to benefit.
Right, because I think what happened for us is we at one point associated money with simple math when it's not the case, not always the case. Yes, 1 + 1 = 2, but when it comes to money, we can use that same one over and over again, and that one can equal 3. Yeah. Or in our case, we can use $1 4 times in a matter of a year, or $1 quarterly. Yeah. And the only thing that we add to it is just the interest. Yeah. And so you get why we said, at least when we opened up, where we were saying if you're not using your life insurance policy to grow wealth, you're using it incorrectly, is because when you use the cash value inside of your policy responsibly, folks, right? You get a loan, you pay it back and the interest, and you see how you continue to do this over and over again, how the compound interest growth helps, and the interest that you're paying back into your banking system grows your policy that you're paying over and above the life insurance fees. I mean, this thing, it just takes off. And as you continue to add more and more funds into this whole life insurance policy that we're talking about, or the chassis that we build with the Wealth Nation team, it just really starts to grow exponentially and make you recognize how amazing it is to start recycling your income over and over again. Now, if this is your first time watching a video, listening to us talk about how we use life insurance, make sure you click on the link below and watch our masterclass so you can start doing your research and getting more information on how all this really works. And if you want to look at a graph and see how these pieces work, make sure you check out our masterclass in the link below.
Absolutely. Now, folks, this is a high-level overview of everything that we're talking about, right? We're not talking about get-rich-quick schemes. We're talking about commitment. We're talking about discipline, and we're talking about a long-term play. So this system that we're talking about really works for those who are disciplined and are patient enough to watch the system grow, make everything work, and recognize that we're going to maximize our efforts from every single dollar that we make. So again, if you're interested, definitely click on the link below.
Right. And what's most important to this is how you manage your money. The actual dollar amount that you make on a monthly or annual basis, it doesn't matter, because there's also broke millionaires who live paycheck to paycheck because they don't manage their money correctly. The most important thing to this is being able to manage your money correctly so you can identify what you want each dollar to do for you.
Absolutely. Now, if you want to continue this journey in understanding how to capture wealth using life insurance, definitely click on our next video.
Remember to own your own lifestyle,
or someone else will.